Hi friends, welcome back to my YouTube channel LS Academy. Today I am going to discuss a problem related to admission of a partner. Before starting the section, please like, share and subscribe my channel. Now let us discuss a question related to admission of partner. Following was a balance sheet of Ram and Rahim who were sharing profit and losses in the ratio of 2:3. Their balance sheet has on 31st March 2015 was as follow. So here Ram and Rahim are the partners of the firm. They are sharing the profit and losses in 2:3 ratio. Now let's discuss with the balance sheet. Liabilities, bills payable, trade creditors, general reserve, P&L account, capital of Ram and Rahim. Here general reserve and P&L account should be taken in capital account. And next is assets, bank, debtor, stock, investment, furniture, buildings. Now let's discuss with the adjustment. On 1st April 2015, they agreed to admit Mr. Peter as new partner, 1/5 share in profits on the following terms. So here they have admitted a new partner into their business. So he should bring 40,000 capital and 20,000 for goodwill in the form of cash. Next is depreciation on furniture 5% and stock 10%. Here the value of furniture and stock is getting decreased. Next, appreciate building by 15%. The value of buildings is increasing. Next one is provide for bad debts at 5% on debtors. We need to deduct 5% on the debtors. Give necessary accounts of new firm. So here in admission of partner we have 5 accounts. The first one is revaluation. Next is capital account. Third one is bank account. Fourth one is goodwill account, and lastly we need to prepare balance sheet. Now let's solve the problem. So in revaluation account, when the asset value is decreasing, we'll record on debit side, and when the asset value is increasing, we'll record on credit side, and when liabilities values are increasing, we'll record on debit side, and when liabilities value are decreasing, we'll record credit side of an account. Now, whatever given in the adjustment will be recording in the revaluation account. First one is depreciation on furniture 5% and stock is 10%. So, value of furniture is 25,000, stock value is 30,000. So, furniture and stock are the assets. Those values are decreasing. We'll record on debit side. 2. Furniture 25,000 into 5%. If we calculate 25,000 into 5%, we'll get 1,250. Next, 2. Stock 30,000 into 10%. If we calculate 30,000 into 10%, we'll get 3,000. Next, appreciate building by 15%. The value of building is 60,000. Here the value of building is being increased. When asset value is increased, we'll be recording on credit side. By buildings 60,000 into 15%. If we calculate 60,000 into 15%, we'll get 9,000. Next, provide for bad debts 5% on debtors. Value of debtors is 40,000. So, debtors value is getting decreased, we'll record on debit side. To debtors 40,000 into 5%. If we calculate, we'll get 2,000. Here we don't have any other entries. Now let's do the total. So in debit side 1,250, 3,000, 2,000. If we calculate, we'll get 6,250, and in credit side we have only one amount, 9,000. We need to write higher amount in the total column. So here higher amount is 9,000. We need to minus higher amount minus lower amount. That is 9,000 minus 6,250. We'll get 2,750. So, whichever side the amount is less, we need to record. So, debit side amount is less, we need to record, and debit side has 2,750 to profit carry down to capital account. We need to calculate this profit to both the partners. So Ram 2,750 into 2:3 ratio, right? 2 by 5 will get 1100. Rahim 2,750 into 3 by 5. If we calculate, we'll get 1,650. Now next we'll do capital account. Capital account starts with opening balance by balance brought down. So opening balance is 50,000 Ram and 30,000 Rahim. 50,000 Ram and 30,000 is Rahim. Next is by bank account. Here Peter's opening capital we will be recording as bank account. The amount is 40,000. Next by revaluation profit. Ram is 1100 and Rahim is 1650. Next by general reserve. Here in the question we have general reserve 20,000. 20,000 into 2:3 ratio, 2/5 Ram and 3/5 Rahim. So if we calculate 20,000 into 2/5 you will get 8,000 and 20,000 into 3/5 you will get 12,000. Next by P&L account which is given in the balance sheet, that is 10,000. 10,000 into 2/5 and 3/5. So you will get 4,000 and 6,000. Next is by goodwill account, which is 20,000 in cash. By goodwill account 20,000 into 2/5 and 3/5. If we calculate you will get 8,000 and 12,000. In debit side we don't have any transaction. Now let's do the total. Now let's do total of Ram. 50,000 plus 1100 plus 8,000 plus 4,000 plus 8,000. You will get 71,100. You need to record in total column. Next we'll do with Rahim. 30,000 plus 1,650 plus 12,000 plus 6,000 plus 12,000. You will get 61,650. We'll record it in total column 61,650, and Peter we have only one amount 40,000. We need to record higher amounts in the total columns of both sides. So we don't have any amount in debit side. So whatever we have total amount, that will be recording as by balance carry down. Ram 71,100, Rahim 61,650 and Peter 40,000. Now let's do bank account. Let's start with the opening balance. To balance brought down. So in balance sheet they have given bank 10,000, that we need to record. Next, Rahim bought capital and goodwill in the form of cash, that we need to record. To capital 40,000, to goodwill 20,000. In credit side we don't have any transaction. We'll do the total 10,000, 40,000, 20,000 will get 70,000 and 70,000 in credit side. So we don't have anything, that's the reason we'll write 70,000 as by balance carry down. Next we'll do with goodwill. So here in this transactions we have a word goodwill in capital account credit side. Okay, we have credit side, that's the reason we'll be recording on debit side of goodwill account. To Ram account and Rahim account, that is 8,000 plus 12,000. Next in bank account we have on debit side, we'll be recording on credit side. To bank account 20,000. Now let's do the total. 8 plus 12, 20,000, and here 20,000. This account is balanced. Now let's do with the balance sheet. In balance sheet, the first one is bills payable, that is 25,000. We don't have any adjustment for this. Next is trade creditor, 50,000. General reserve P&L account we have taken already in capital account. Next is capital account of Ram, Rahim, Peter. So whatever we have carry forward in capital account, that will be taken. This amounts 71,100, 61,650 and 40,000 will record in balance sheet. 71,100, 61,650 and 40,000. Next, asset side, bank. Whatever the balance carried on we have in bank account, that will be recording. That is 70,000. Next is debtors. So here the value of debtors is decreased. 40,000 minus 2,000 will get 38,000. Next, stock. The value of stock is 30,000. So stock is decreased by 3,000. So 30,000 minus 3,000 will get 27,000. Next is investments. We don't have any adjustment, so that is 20,000 will be recording. Next, furniture. Here the value of furniture is decreased, so 25,000 minus 1,250 will get 23,750. Next we have buildings. So the value of buildings is increased. 60,000 plus 9,000, you will get 69,000. Now let's do the total. Liabilities, first one is 25,000, next 50,000, next 71,100, next we have 61,650 and next 40,000. 2,47,750. Now we'll calculate asset side. Bank 70,000. Next we have 38,000. Next we have 27,000. Next 20,000. 23,750 and last one is 69,000. We got 2,47,750. 2,47,750. Here both the sides we got same answer. It means that it is tallied. Thank you for watching. Please like, share, subscribe my channel.